Hello again. So we're here in the last couple minutes of trading on Friday, June 17th. And so everything's been kind of light. Things have been kind of easy for some reason. It's been easy. And so I'll just walk through the trade that I made. I've obviously been biased on the euro to go short. And so I've been getting a lot of sell signals on the euro, which it's not always a good thing. You know, you want to get obviously diversity in your trading signals so that you're getting a lot of good diversity in buying and selling. So we're kind of in an interesting position here. I mean, I have 4 minutes left, basically till close, and so my binary options expire in a couple minutes. I have two binary options, two put options. One exercise price here is at 112.846, and then the lower one is at 112.689. So obviously I put on the second one as not as a hedge, but as just kind of like felt like that was an opportunity where I could sell. It was an overbought activity. So today, obviously, basically we had Mario Draghi's speech, so that kind of bumps up the euro every once in a while. Never know. And there's been a lot of mixed up sentiment over the currencies, especially with the Brexit. So that's very suspicious too. So you have a lot of suspicious kind of sentiment. But overall, it's been an easy day. So this really should be a profitable trade. However, it's so slow right now. It doesn't look like it's going to push down towards the lower exercise price, which is fine. But just a good example for how this is such a hard trade. The best thing to do is always to kind of wait and see, be patient, and sell at those overbought levels and buy at those oversold levels. Easier said than done. So like as a side note, I mean, I'm going to go ahead and just blitz through here. I'm working on trading research. So basically this trading research is going to fine-tune kind of what I've been gauging as market sentiment. So a lot of the sentiment analysis, I don't actually do sentiment analysis. I just qualify data that is, that are numbers, and I qualify them. So basically I put like a bearish or bullish, like a codifier on them. It's a lot more sophisticated than that, but it took me a couple years to develop working in derivatives and basically the derivatives world. I grew quite fond towards this type of financial analysis. And so what it's been showing is that I'm actually able to add an indicator, which is validating my trading system. So I'm adding the tweets and stock twits. And so through social market analytics, basically they were able to provide me with some data to backtest, and it's been showing that it's been proving quite good. So that's what I'm working on right now, that I'm going to eventually write up and share. It looks like the one trade was profitable. That was just kind of like the tactical trade, and then the one trading signal trade was unprofitable. So so basically break even, right? It's very difficult. I mean, all else remaining equal, I'm confident that would have been a profitable trade. So obviously a lot of these things take into account a lot of the economic releases and of course political action. And so although this was an easy trading day, it was also just kind of rigged a little bit for the euro. And so these are kind of like really dangerous these are predicated on very dangerous predictor variables. So that's why I kind of wanted to go into my reasoning of why you should or why you shouldn't use sentiment analysis, when you should implement it. So I'll go ahead and exit from there. Okay, so here we go again with the sentiment analysis. When to use it and when you should implement it in your trading signals and your system and your methodology. When it's not path dependent, so that's the first thing. So if it's not path dependent, it's showing that it's going to bounce around up and down. It's not just going to slide down. So like for instance 2014, basically the euro was just like going down like the slope. Okay, so that was like a really bad time for basically just doing kind of intraday trades based on sentiment analysis. But the last couple years have been really good, for that, like 2015 and 2016. Basically, when you have this much amount of this amount of mixed sentiment, and you have this amount of precarious variables that where people are saying, oh, there's a relief rally, this is good, buy this, buy the British pound, buy the euro, because things are not so bad. Obviously, that's like this news is not actually coinciding with reason. So that's kind of a false indicator. So if you're going to go with the sentiment or go against the sentiment, it doesn't matter, because you're basically applying yourself to a non-factor. So the factor is the huge thing. So what explains and what explains or what correlates with the price and the returns is also going to be what is going to be your factor. So your factor, if it's able to explain the price and returns, you're going to be able to have a little bit more predictive power. So for instance, today, like here's today's chart, 15-minute price chart. So I mean, it looks like it was going to do what I wanted it to do. It looks like it was going to go on the sell side, but of course there was a relief rally, and so that factor with the ECB plays a role into it. So that factor actually outweighed the sentiment. So that's a key to understand. So we'll go into the next section. Basically, I'm just going to talk about my trading research, how I'm tying it in with social market analytics, which is exciting because they use textual sentiment analysis. So the same type of stuff that Google would use to kind of mind read of how people are searching for stuff. So there's a positive and a negative charge to your words and texts, which is interesting. So it gets awfully sophisticated and complicated, so that's why I'm also implementing their research, their analytics, as opposed to just kind of like guessing and estimating it myself, which is a possibility. I could do that. So basically what they do is they create a so-called S score, which corresponds to a Z-score. If you understand statistics, a Z-score is basically going to fall upon a bell curve within a statistical significant level. So what I found basically so far, I'll just give you a sneak peek here. This is cumulative returns from my trading signals since 2014. And so obviously, this is pretty good. I'll show you the map of the trading graph actually without without social market analytics. And it should be here. Yeah. So this is without SMA. So without SMA, I was getting, decent, I mean, if you put it like a line, you put it like a straight line, I guess it would be barely positive on the X variable, right? The slope. So you get, this trading system is going to give you kind of like an edge. It's a 50-50. It's kind of like it's a 50-50 crapshoot. So you're going to be able to borrow from the markets, basically. And perhaps if you've got good money management, you got money, you're going to be able to lend to the markets, if you understand what I actually mean by that. So basically, it becomes difficult. You have to have money if you're going to implement this, just like a casino would have to have money. But when you go to social market analytics and you filter it and you make it a little bit more of a quality signal, which is what I was looking to do and which I successfully have found thus far, you get this. So this is much better. So very lower muted on the downside, and a lot more cumulative returns on the upside. So out of n sample size of 59 trades over 2 years, which obviously is not enough trades if you really want to be a professional trader, but the point is that I'm doing research and analysis. So out of 59 trades, the average return on the cumulative return was 5.51%. The rho, which is another Greek for standard deviation, is 0.87%. That risk-free rate, I just basically I'm just saying it's 0%. And then the Sharpe ratio is basically just the risk-adjusted return, so the mean over the standard deviation, 0.58. Nothing to brag home about. However, you see here, obviously this is a lot better than this. So these are buy-sell signals. And 2014, well, it looks like 2014 was a bust year. See what I mean? So let's see if those same deal here. Yeah, bust year. So you can't implement it in a path-dependent market. So that's evident here. I think that's pretty much all I have to say. The biggest thing to take home is be careful on a lot of these predicates. A lot of the news is kind of fake. To think that you should be positive on this sentiment is totally fake. It's neither here nor there. Currency volatility is going to go up. It's going to get difficult, and so that's the big thing. And for sentiment analysis, if you're willing to use sentiment analysis and bullish and bearish sentiment indicators, you got to know when to implement it.